All right, good morning or good afternoon, wherever it may be. Thank you for joining our webinar, where today we're going to talk about sunsetting the 179D tax deduction after the One Big Beautiful Bill Act passes, specifically talking about through some updates, safe harbor, and timelines to consider. So my name is Mark Bacon. I am a professional engineer, and I'm the practice lead for Layton's commercial real estate service line, specifically focused in on our energy efficiency services. So with that, I'll get started with a little bit of background about Layton, and then I'll talk a little bit about myself here as well. So Layton, we are an international tax consulting firm. We've got 50,000 clients. I mean, you can see this on the slide, 3,000 employees. Been doing this for 25 years, so fairly experienced in the space. I am a professional engineer. I've been working in energy efficiency for a decade now. Been a PE for almost 20 years, really focused in on the intersection between tax and consulting. The way I like to explain it to people, and the reason why Layton exists, is the tax code is really, really broad, and there are some things in it you need to go pretty deep on. And that is really the intersection between tax and engineering, which is what Layton does really well. So I used to work for a large CPA firm. The way I was explaining is you can't expect your CPA to know everything. There are some specialty engineering things in the tax code, and that's what Layton does. Now, we've done 10,000 of these energy studies, so you're in good hands. Feel free to use the chat if you get any questions along the way. Happy to discuss. And at the end, there's my contact information as well if you have any other questions as we go through this. So, little agenda for today. So we want to understand the impact of the One Big Beautiful Bill, and really what are the opportunities and challenges that came from that. I'll give you a brief preview. It's urgency is the main thing. So it's definitely a use it or lose it scenario now, but we've got enough runway to work with. And then the one that comes up pretty often is safe harbor. Those of you who are paying a lot of attention may have noticed they just issued the beginning of construction rules for investment tax credits, and I can talk through that a little bit, what impact it might have on 179D. And then we have time on the end for Q&A. So it is only a 30-minute presentation, so it should be short and sweet, but honestly, add your question as you go. I do presentations like this almost monthly, so I would rather switch it up and answer some questions instead of just monologuing the whole way. But ask them if you got them. So, a little bit of background here. Before we get into what impacted the One Big Beautiful Bill, I really wanted to go through first how all of these incentives were affected, and just to give you some context on how they're important. I'm not going to start with the first one, the 45L. I'm going to start with cost segregation. And the reason why I'm going to start with cost segregation is hopefully most of you are familiar with it. If you're not, it's the idea of accelerating depreciation by changing basically the asset life of pieces within a building. So what you're able to do is take cash flow in year one of the building instead of depreciating part of the building over 39 years or 27 and a half years if it's residential. Now, why would you want to do that? The idea is that you get cash flow today, and money today is worth more than money tomorrow. And the way to look at cost segregation is, I've heard the analogy of you just take a building, turn it upside down and shake it. The pieces that come off, like the furniture, even flooring, things like that, those can have accelerated depreciation on them. The way that works is you reduce your basis in the building, you get cash flow now. So you can get 15 to 30% of the value of the building in an immediate accelerated depreciation. So say $100 million build, you're looking at $20, $30 million you can get as a tax deduction in the year you place the service. Now, why is that important since we're talking about 179D? Pretty simply put, 179D follows what cost segregation does. So consider cost segregation the big brother, and the 179D is going to follow along behind it. So if you or your clients are leveraging cost segregation, it tells me a few things. It tells me you're in a position where you have enough taxable income where a tax deduction is important to you. It tells me that you have the ownership structure where it makes sense for you to be able to accelerate depreciation. And it also tells me you're likely planning on holding the asset long enough that you're not going to have to worry about depreciation recapture, which is an entirely different webinar if you want to talk about that. But the idea being that you can't take a whole lot of money flow up front and then just immediately sell the building. So rule of thumb or litmus test, whatever you want to call it, is if you or your client are doing cost segregation, you should really consider layering 179D on top because it uses the same mechanisms. Essentially, the difference is cost segregation works on kind of the removable parts of the asset. 179D focuses on some of the things that cost segregation can't do. So insulation is a great example. You normally cannot accelerate depreciation of insulation through cost segregation. Even a lot of the HVAC equipment or lighting you cannot. 179D allows you to accelerate depreciation there and get you a little bit more year one cash flow, or whenever you did the renovation, you get a little cash flow in that year. Now, the difference is cost segregation is done on the cost of whatever feature you're accelerating. 179D is done on a per square foot of the entire building. So right now it's worth $5.81 a square foot. So for quick math, I'll stick with 100,000 square foot building could get you upwards of $581,000 in a tax deduction. Again, to layer on top of your cost segregation. So just a quick heads up, I always start with cost segregation because if you understand that, you've eliminated most of the 179D questions. When I say most of them, I mean most of the tax related questions, which I would say 9 out of 10 times that we don't do a 179D study for one of our clients, it's for a tax reason. There's probably only 1 out of 10, maybe even less, where there's a technical reason around energy efficiency that we don't actually perform a 179D deduction. So just a quick heads up, handle the tax questions and 179D flows pretty easily. The same can be said true of the 45L tax credits. It is also accelerated depreciation. It is for our friends in the residential space. Similarly, it's done on a per unit basis, not the entire cost of the building. So it used to be worth $2,000 per unit. Now it's worth upwards of $5,000 per unit if you're building to zero energy ready homes, or $2,500 if you're building to Energy Star standards. So again, very similar idea. We're here to talk 179D, so we won't focus a lot on that. And then finally, just other thing to keep in mind, if you're doing 179D, there's a good chance you're thinking about doing things like putting solar panels in your building or using geothermal heat pumps. There is an additional Section 48E or an investment tax credit you should be considering. That's worth usually about 30% of the cost to put that in the form of a tax credit. So really, really valuable. If you're thinking of 179D, really consider layering all of these together. So I just wanted to give you that as a bit of a preview, but we know we're talking about 179D. Really, who should really be looking at it? Basically 2 groups. The first group is somebody who owns a building. So if you own a building, you have basis in the building, you make an improvement, you can accelerate depreciation and take that as a tax deduction, basically, at the rate that I mentioned before. So $5.81 or whatever it may be based on the year you placed the service. The second group, and it's a really interesting one, is designers. So any of you out there who are architects or engineers or are working with architects or engineers, you can take the tax deduction. It's awarded to you via an allocation process for work that was done for non-taxable entities. And the basic reasoning for that is back in 2008, the government looked and said, we want to increase energy efficiency. Who owns a lot of buildings? Government does. But government doesn't pay taxes, so they can't really take a tax deduction. However, the person who did the design of that building or energy efficient feature can then go and claim that tax deduction. So as I said before, you can allocate it. So really great because as a designer, you don't have basis in the building, so you don't need to reduce your basis. So it's very lucrative for you to be able to take these tax incentives if you can. But again, the intent behind it really is, let's really make these buildings more efficient. The statistic that's often get used is 40% of energy use actually comes from commercial buildings. So if you can do anything to reduce that by making the buildings more efficient, we're going to want to support it, which the fact that we're here to talk about sunsetting kind of tells you that 40% energy use is going to be interesting without some of these tax incentives. The other thing to bear in mind, nonprofits can do this as well since 2023. So if you're working with a local nonprofit, you are able, if you're a designer, to take that tax deduction. So what's it worth? A lot of numbers on this page. I'm not going to go through them. The most important numbers for you will be when it says deduction meeting PWA. PWA is an acronym for Prevailing Wage and Apprenticeship. What happened in the Inflation Reduction Act is they added in basically 2.5 times multiplier to the value of 179D if you're meeting prevailing wage and you have a registered apprenticeship program involved in the project. The best way to look at this is it's not a direct correlation, but If you were familiar with Davis-Bacon wages, you're probably in the right spot. So more or less, the way to look at it is there's websites you can go to say, okay, an electrician on my project should be paid $17.13 an hour. Did they make that? You go back and check payroll. Do we have an apprentice involved? So there's a bunch of rules around apprenticeship rules, and we did separate webinars on that if you're interested. But if you're meeting those, and a lot of people are, your deduction can go up to these numbers in the end of the second column. So the number I mentioned before at the end is 170.90 is worth a maximum of $5.81 a square foot for any project completed in 2025. Anything completed in 2024, the max was $5.65. 2023, you went down to $5.36 a square foot. So again, I'm not going to go through all these numbers. They're basically sliding ranges based on energy efficiency of your building, running between 25% and 50% more efficient than an ASHRAE baseline, which I'll talk about in a minute. So the idea being, once you hit 25% efficiency, you start sliding up on the scale. You can go all the way up to that $5.81 a square foot. Now, this is actually a great question came in from Samuel in the chat. I've heard there's a way to qualify for 179D without paying prevailing wage. That is true. So fortunately, what happened, this prevailing wage and apprenticeship is part of a lot of things in the Inflation Reduction Act of 2022, which was implemented in 2023. So there had been a push to increase trade use in the US, basically. So we need more tradespeople and we need to pay them appropriately in America. They were smart when they put this rule in place because they realized projects have already started construction, and it's very hard to go back and say, hey, you should have already been paying people prevailing wage, and we're not going to give you this 179D deduction if you didn't already know we were going to do this. So they gave us an exemption. And the exemption basically was if you had started construction before January 30th of 2023, you were exempted from this rule. You automatically qualified at the highest rates. So what that means for those of you out there, if you started building your building basically before early 2023, you will automatically qualify it up to that $5.81 a square foot. And then you don't have to worry about going back to prove whether or not you paid prevailing wage and whether or not you had a registered apprenticeship program. So it's very valuable because it gives you a lot of leeway. We know average construction life cycle, 12, 18 months, depending on what kind of building you're building. So there are definitely projects out there that are still going to qualify automatically for this highest rate. So don't be too discouraged if you're not meeting prevailing wage or you don't have a registered apprenticeship program. You might still be able to hit the full qualifications anyway. So great question, Samuel. Thanks. Okay, so I said I was going to talk about some of these other things here, just to give you a little bit more background information. What did the Inflation Reduction Act do to 179D? It did a few things. So as I mentioned before, 179D was really focused on commercial building owners and government entities. As I said before, now any nonprofit is eligible starting in 2023. So think nonprofits, churches, we've done some churches, tribal schools, Alaska Native Corporation owned buildings. So there's a lot of options out there for who can now take 179D, and critically, real estate investment trusts can do it. So a lot of commercial real estate owned in major cities, you will know, is owned by real estate investment trusts. They can now take 179D, which they never could before. So, and we've got some information on that. It basically has to do with dividend management, but it's definitely a valuable thing for a real estate investment trust now. So the other thing is, as I mentioned before, 2.5 multiplier. So 179D used to be worth up to $1.80 per square foot. They started inflation adjusting it, but it's actually moved up to $5 a square foot. So when you adjust for inflation, that's why it's worth $5.81 a square foot in 2025. There also used to be a lifetime cap. You could do 179D once and then never again. Starting in 2023, you could do it every 4th year. Now, with the sunsetting in the One Big Beautiful Bill, that will not really matter. But then, as I mentioned, added local prevailing wage and apprenticeship requirements. But as I mentioned before, ASHRAE, I said I was going to talk about that. What the IRA did, one of the changes that came out after the IRA, was that they confirmed the use of ASHRAE 90.1 2007. And this addresses one of the most common questions we've gotten over the last decade. What happens? Like, is my building really efficient? How do I know whether or not I'm going to hit 25% savings threshold? The advantage you've got is we are using the ASHRAE code 90.1 from 2007. So any modern building you build today is going to do significantly better than that in terms of an energy model. So you're going to be in pretty good shape just making kind of the efficient decisions that we need to make today. So we need to use more efficient boilers. We need to use things like heat pumps. That makes you in a pretty good shape when it comes to energy modeling. So the idea behind this is this incentive was meant to be used. It was meant to be achievable, and that's the reason why they affirmed the use of ASHRAE 90.1 2007. So it's really in place to get rid of those old, 1960s boilers you get sitting in your basement. You definitely don't want those. Those are going to hurt you a little bit. But as long as you're building to modern standards, you should be in good shape. So what actually happened? We get about a little bit of time to talk through this, but what changed in the One Big Beautiful Bill Act is that we put a termination date in place. So what that means is you have to start construction before the end of June in 2026. So starting July 1st, 2026, if you haven't started your construction by then, you won't be eligible for 179D. So that gives us about 8 or 9 months left to start construction. But then after that, you're still able to claim it as long as you start construction. So which is why we started talking about things like safe harbor, and I'll talk about that again in a second. So basically you need to make sure you do that, but there are 2 ways to define beginning of construction, and it is through safe harbor, which is incurring 5% of the project costs, or physical work test, which is the one that most of our clients actually qualify based on. But before we go into that, I think a little bit more history will help you, because a lot of people were shocked that 179D was sunset. The reason why they were shocked is if you look at the history of it. So it's been around since 2006. And you can see all these times it was extended. So those of us who have been in the space for a while are familiar with this game where 179D would periodically expire for a little bit and then get re-extended. But it had consistent bipartisan support. Removal of 179D was not on the initial House proposal for the One Big Beautiful Bill Act. It was added by the Senate later. So there wasn't really a lot of time for those of us in the industry to object and try to deal with this, but we're hoping it will come back. A lot of people are fairly confident it will come back. It was a very popular program. I think the fact that it had the word energy efficiency in it probably came into play here, but it has had bipartisan support the entire time. So hopefully it will come back. But this timeline shows a really important date here of June 30th, 2026. And before that, you have to meet this beginning of construction. So we get a little bit of time to talk about this. Beginning of construction is going to be fairly interesting. There are a few rules in place. And as I mentioned at the start, the rules for the investment tax credit, what they consider beginning of construction, just came out. It doesn't directly affect 179D, but it gives you an idea of how the government is thinking about these things. Beginning of construction has been a conversation for a really, really long time, particularly things like offshore wind turbines. There's a few rules in there about continuous work. What was happening back in the day is, in order to qualify for a tax credit, somebody would put in the footings of a building, for instance, or the footing of a wind turbine, and they wouldn't do anything with it for 10 years. So the IRS over time has slowly changed what they call physical work. So the physical work test is basically exactly what it's called. It is a measure of, is there significant physical work performed on site? So for us in the 179D world, you're very comfortable saying you have done physical work if you've done something like poured your concrete. If you've got concrete in your building poured before July of 2026, you're still going to be able to do 179D. Occasionally, we'll get clients who will put in things like plumbing, which in my opinion would be significant physical work. That would also qualify you as being able to be, for lack of a better term, grandfathered in, so you're still able to get 179D. What doesn't qualify, and I get this question a lot, is we cleared the site. So, we did all this stuff and we took down trees or whatever else it may be. That's not going to qualify. It's pretty much specifically called out as something that does not qualify. So don't think you can go out there and just prepare the site in June of 2026 and you'll be good. You have to actually really be pouring concrete. Even things like planning, permitting, designing, none of that's going to count. So it's very important that you're doing significant physical work on site, which specifically are going to be things like foundation work, pilings, that kind of things. So we're getting a lot of people are rushing to try to get projects in for that reason. I would encourage you, if there's anything you can do, if you haven't already done it, to accelerate your construction life cycle in order to be able to hit these goals, it would be a good idea. Also, bear in mind, 179D is not the only thing affected in the One Big Beautiful Bill Act. And I've got a separate presentation on that. If you're interested, you can reach out to me independently. There are several other incentives that are affected by that June 30th, 2026 date. So the construction industry in general is trying to rush to get a lot of these projects started so they can take advantage of the tax benefits that came out of the Inflation Reduction Act. So if you have any way of getting your foundations poured, really good idea. Some of the other incentives that are affected by this is, as I mentioned, the investment tax credit. Those have very similar things. You have to start construction by a certain date. The difference is the current administration is trying to curtail wind and solar. So what's happening with that is wind and solar are not able to qualify for this method number 2, which is safe harbor. So anybody who's doing solar and wind has to actually meet the physical work test unless they're below 1.5 megawatts. So it's really important, if you have any of these projects, not necessarily to count on safe harbor. The thing with safe harbor is you have to incur 5% of the total costs. Now, really important that you document this correctly, because not everything qualifies as a cost that you can add towards the total cost of the building. The other big thing to keep in mind is you probably don't know the total cost of your building right now. So if you're planning on doing 5% safe harbor and saying, okay, I'll make sure I incur enough of those costs before July of next year, if something goes wrong on the project and your costs start to overrun, and let's say you were just, and then all of a sudden you get a bunch of change orders and now you're not at 5% anymore, you might lose your safe harbor. So just bear in mind, if you're counting on 5% safe harbor, it's much riskier than having physical work performed. So heads up for everybody that is, you can't do that for solar, you can't do that for wind, safe harbor. Even doing it for other projects gets a little tough. So heads up for everybody. The fact that they did implement that for part of the investment tax credit, I'm not sure. I haven't heard of any regulation coming out around 179D. Typically 179D regulation is pretty delayed anyway. So I don't expect anything will come out around beginning construction for 179D, but it could happen. So just something to be aware of. And we got a question in the chat from Greg. Is this available for upgrades or renovations or just new construction? Sorry, Greg, I should have mentioned that. It's both. So new construction, definitely good projects. Renovations and upgrades are good projects as well. It depends on the scope of the renovation, though. So there's a couple rules of thumb. So one, you have to be affecting either HVAC, building envelope, or the interior lighting in a building to qualify for 179D. So if you're doing, say, like an ADA project or an interior fit out, changing walls, anything like that, it doesn't qualify for 179D. So you can't take the tax deductions there. The other thing to consider is if you've got a 100,000 square foot building and you're just adding on like a 5,000 square foot addition, it's kind of hard for us to argue that you're making the building 25% more efficient. So there are kind of informal rules in place. There is no actual rule on that, but there's I guess an ethical rule, for lack of a better term, is you don't just, schools are a good example. You can't just go in and add a little security office on the front of the building that's got gated doors there. You can't just go add that and then take a deduction on a 500,000 square foot school. And honestly, even if you did that, there's a limitation on the cost of property. So something for you to be aware of your question, Greg, is if you're doing an upgrade or renovation, let's say it's a really big building, 200,000 square feet, times $5.81, that's $1 million deduction. If the work you did only cost $200,000, you can't claim $1 million deduction for a $200,000 renovation. You are limited to the cost of the renovation. We don't run into that very often, but it's just something to be aware of depending on the scope of the renovation or addition that you're working on. So with that, I know we're a little bit early. Are there any other questions in the chat? I don't see any right now. I can just go quickly through, just a heads up for everybody here who's on the webinar. Leighton, a couple of the services that we're able to offer, kind of looking through a lot of our research and development services. And sorry, I get some questions coming in the chat, so I'll go through this quickly. R&D, really valuable. It was actually greatly increased in value through the One Big Beautiful Bill Act. So if you have any research and development activity where you're uncertain of the outcome and you have to do an iterative process to get there, you should be looking at R&D tax credits. State and local tax, everybody is going to be subject to state and local tax. So if you have any questions around that, we have an entire team. And then, as I mentioned, our energy efficiency service line that I already talked through. I'm going to click to the next slide here so we get questions, and I can answer the other questions that came in. So, Greg, I guess follow up to your initial question. Boiler replacements. I love boiler replacements. It's very easy to show that replacing a boiler in the building affects the energy efficiency of the whole building because that hot water goes everywhere. So if you're doing full school heating and you've done a boiler replacement, fantastic project. You're likely going to be able to claim the entire square footage of the building as 179D deduction. You just got to make sure the cost of the boiler replacement is not going to limit you too severely, but boilers aren't cheap, so you should be fine. And then another question for Nicholas, documentation for prevailing wage and apprenticeship. Super fun question. The answer is you get two options on how you do that. There are some specialty firms out there that do it, and I can, if you send me an email, I can talk to you about that later. There are firms that really specialize in that. The biggest one being some large CPA firms will do it. What they end up doing is they request your payroll, and then they manually look through it. So it tends to be a very manual process where they will have to go to a website, sam.gov, and look at, okay, how many hours did this person work? How much should they get paid? So it's really a payroll analysis, kind of here's the job title, here's what they should have made. And then you check the box. For the apprenticeship, they have to check to see if you're using an apprenticeship, registered apprenticeship program. If there is not one in your state, you can apply to the state apprentice board and say, we don't have one. And then they can basically grant you an exemption. But there is ratios of apprentices to journeymen. So you have to keep all of that in mind as you go through. And as I said, there are companies that do that. So two options is there are companies that kind of, as much as possible, automate it through access to your payroll records. So if you have really good payroll records, it's not that hard. If you don't have good payroll records, you're going to end up going through a fairly manual process. I encourage most of my clients not to do that themselves, though. This is definitely specialist territory. It's not hard, but it takes a lot of time. All right, any last minute questions here? I know we just dropped in. See, you've got a QR code there if you want to schedule a call. We've also got a link in the chat if you want to follow up with me. But I don't see any other questions in here. All right, well, with that, we'll keep it short and sweet, 30-minute webinar for your lunch. Oh, sorry, one more question. How far back projects start? So the good thing is projects can actually go all the way back to 2006 when 179D was launched. Realistically, if you're a commercial building owner, you've already accelerated depreciation in your building. I recommend people to don't go back more than, say, 7 years. If you're a designer, you can only go back 3 years because you have to amend a return. So if you are working on a project that needs to be allocated to you, you get a 3-year look back. If you own the building, 7 years. All right. Well, I appreciate everyone's time. I hope everybody has a good weekend, and feel free to set a meeting with me. All right. Thank you, everyone. Have a great day.